Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Global equities falter with Asian markets falling close to 2% after Donald Trump announces a 10% tariff hike on Chinese imports worth $300 billion from September. GST collection rebounds in June to move back above the 1 lakh crore mark after hitting a 4-month low in the month of May. India's overseas bond sale is on track and the operational details are being worked on, according to a government official. And Airtel reports its largest ever loss since listing as one-off expenses and exceptional items hurt bottom line. Donald Trump's done it again. The US president has gone ahead and announced higher tariffs on Chinese goods worth an additional $300 billion. Global equities went into a tailspin as soon as Trump made the news public. His Secretary of State told Bloomberg News, Haslinda Amin, that the move will force China to rethink ahead of the next meeting in the month of September.
So there are talks that will begin in Washington in September. But back to first principles. For decades, China has taken advantage of trade. Taking advantage of trade versus the United States of America, and taking advantage of trade versus countries in Asia and Southeast Asia. And it's time for that to stop. And President Trump has said, we're going to fix this. And to fix it requires determination, and that's, I think, what you saw this morning. The president is determined to achieve this outcome. What we're asking for is really easy. Indeed, the Chinese had agreed to it at one point and then walked away from the deal.
So what is it? Is it Huawei at the crux of it? Can that be a compromise?
It's not about, this is far bigger than that. This is about the central premise of how trade will be conducted around the world. Is it okay for a nation that was once developing to continue to take the advantages when they're no longer in that status? Is it okay for a nation to put on enormous tariffs when the other counterparty to the trading arrangement won't do that? Is it acceptable to put tariffs and barriers on American companies investing in China when the United States is wide open to those investments? All we have asked for. It's really simple. It's what you, it's the golden rule. It's what you teach your kids, right? Do unto others, where you want fairness, evenness, reciprocity. These are core concepts. They're what I spoke about. And when that happens, Asia will thrive, Southeast Asia will thrive, the United States global trading system will thrive. But it cannot be the case that a nation uses protectionism to protect its own goods and uses predatory tactics to deny others' economies the chances to grow.
At what cost? We're seeing PMIs around the world already easing. We're seeing countries around the world, well, revising downwards growth projection. I mean, yes, the U.S. is in a good position, leading global growth, but with President Trump saying that he will tax the hell out of China, there are negative implications.
But negative implications of decades of bad behavior on the part of China.
When you take a look at how the U.S.
Negative implications for every business in this room, and we're going to fix it.
Well, the markets are, of course, slipped on this unexpected move because the markets were trading higher until this came out. And frankly, if you look at that intraday chart of the S&P 500, that tells you the story. The markets or the Dow were up about 300 points or about 1%, and they cracked to close about 1.5% lower. So very unexpected and has come out of the blue. And that's hit the sentiment across world markets, across commodity markets as well. Joining us on the phone line to talk about the market impact is Seth Freeman, Senior Managing Director at Glass-Ratner Advisory and Capital Goods. Seth, thanks so much for taking the time out and speaking to us. What do you make of this? While all this, which is the point that I think I've been trying to make, it's just very foolhardy to try and take a trading call based on one noise coming in, because the noises until last 2 weeks was that it's all going as per plan. China and US are meeting and things could turn out well. Suddenly, this tweet sends the capital markets roiling.
Yes, the real problem here is the fact that we get these abrupt announcements and it seems inconsistent, or as some people believe, part of a strategy past the Fed announcement from yesterday.
So, Seth, what do you think is the course of action? Hitherto, the world markets were worried that if this happens, what is already looking like a slowdown might get exaggerated further. Now, of course, Trump and his aides have said that this is in order to get China thinking, maybe even to get the Fed thinking, because Jerome Powell did refer to this possibilities in his talk as well. But the question is what happens next, and how would markets price that in? Would the markets price in further slowdown and therefore lower levels and lower valuations over the course of the next couple of months?
Yeah, I think it's going to put pressure on valuations, but it just creates sort of this uncertainty, negative sentiment. We've seen a significant reduction in two-way, especially venture capital investments between U.S. and China over the last 6 months, about nearly 20% because of this. And large corporations who earn a lot of their revenue from sales in other countries, in particular to China, can't make any plans. And so it's just very disruptive. But there's a big difference here. And one thing we have to remember, these new tariffs are not supposed to be phasing in until September, number one. But also, apparently these are going to affect consumer goods, the things that Americans buy. And so this could have some political backlash.
Yeah, and actually, backlash from China as well said, that would be my question to you. While it comes into effect from September, and while Trump said that the trade talks still go on, let's see what comes out of it, do you reckon that this announcement would invite some bit of backlash from China itself?
Well, certainly, you know, the Chinese do not feel powerless in this situation. And sure, they can put pressure on the U.S., but I do think that, you know, we're going to see this is going to have to translate into higher consumer prices eventually. Trump talks about this as though the Chinese are paying higher tariffs, but the people who pay the tariffs who really are the buyers.
Yeah, that's true.
And there's a point at which this has to be passed through.
No, okay, I take on board that point, but my larger question would be then, therefore, that do you reckon that we are headed substantially lower from where we are right now? Now, India, for example, has already corrected due to its own idiosyncratic problems. There are some other markets which have done that, and the world was not looking an unhappy place. Do you think the world markets over the course of the next 1.5 months would be sulking, and would that put further pressure on the EM and the Asia Pacific region as well, even on the markets which have corrected thus far?
Yes, I do. And even as dismal as it seems today, at this moment, in a sense, the U.S. dollar is a safe haven, and there's negative interest rates essentially in many other parts of the world, and so there are opportunities to have returns here in the U.S. still, and that puts pressure on money flows.
Yeah, okay, and that's a pertinent point too. And money flows, if indeed are pressurized, put pressure on equity markets, as we've seen in India for sure. Seth, thanks so much for taking the time out and joining us this early morning in trade. Well, a bit of a no-brainer, but good to hear that perspective as well, that maybe there's a backlash that could come in, political as well as economic. Maybe that impact on fund flows, and therefore maybe equity markets which have already corrected might correct further. Now remember, India had a bit of a correction yesterday itself, and maybe that's why, too early to say, but maybe that's why the SGX Nifty is not showing as strong pressure as the rest of the Asian pack, because Nikkei is down 2.5%, Shanghai is down about 1.5%, SGX probably a bit more well behaved, but this may be deceptive because we may well go down very, very quickly. Remember yesterday, for example, Bank Nifty just sliced through the 200-day moving average, ended close to around those levels, and if indeed it were to head further lower, then the downside possibility is substantially higher. And frankly, just this, that the worsening global backdrop probably adds to further weakness in an already weakened Indian market setup. The only respite, if you will, and maybe people take some heart out of that, we'll talk about commodities a bit later on, is that crude prices have corrected too, and that just inadvertently helps India. So this fall that we saw, amongst the steepest falls in a number of weeks and months for crude, and that probably is a bit of a heartening factor when it comes to India. Just very quickly, what should one watch out for in the session today? India specific, a set of numbers coming out, both large cap and mid cap, a slew of names. So HDFC, SBI, ITC and Power Grid, 4 large names. You could probably expect ITC and Power Grid to be less volatile, but key eyes out for the volume growth in ITC, and SBI and HDFC for what they say in the asset quality and the guidance that they give for the quarters ahead. Very, very important. At the broader end of the spectrum, bunch of names there. Ujjivan stock was very active yesterday to watch out for. Nestle volume growth numbers as well as Bata numbers to watch out for, and also keep a keen eye out for some very interesting mid caps like VMart and Astral Poly. Would give a good idea about what's happening to consumer sentiment and the B2B sentiment. So a bunch of very interesting names to watch out for in the session today during the course of the day. The stocks to watch in the session today, that's the key thing. The loss masked the business recovery in Bharti Airtel, I think, because the Q1 consolidated EBITDA was higher, again due to adoption of Ind AS 116, and I won't dwell too much on it, but most brokerages have sounded reasonably sanguine. Citi, for example, says that the results are operationally ahead and that there's a robust performance from the India business. Morgan Stanley says that the India wireless revenue adjusted EBITDA largely meet estimates. So the numbers not bad. Let's wait and watch if in a subdued market Bharti tends to react that way. Tata Power, again, EBITDA margin numbers look fairly solid. The numbers, revenue and EBITDA front as well, seemed largely okay. The rise in net debt, though, is a key monitorable. And amongst the other bad news is management is saying that the Mundra tariff hike may be delayed. JK Tyre could be a big disappointment, I think, because Apollo and Seat had not done badly. But JK Tyre revenues, while okay, but net profit plummeted 73%. Margins came off quite starkly, 400 basis points, because EBITDA was down 26%. Might be that the markets could react negatively to this one. The increasing costs impacted margins because raw material costs as a percentage of sales rose quite significantly for JK Tyres. Eicher, no good news. The sales slowdown continues. The Royal Enfield sales were down 22%. Remember, it was Achilles' heel in the quarterly results that we analyzed yesterday. Now the monthly sales numbers not looking great either. Just very quickly, Jet Airways, there's a hope for revival. There's a Mint report which says that the 4 potential bidders have shown interest and the deadline might be delayed. Let's see if Jet Airways reacts positively. And a couple of other companies like Talwarkar and DHFL, wherein they have defaulted on different papers, but they have defaulted. Let's wait and watch if these stocks were to react today. However, let's tell you what's lined up on First Word today. Yatin Johnson to tell us why truck and bus makers may soon be revamping their product mix. Somit takes us to Airtel's earnings as we try and find out if the pain will continue in the quarters to come. And Shefali tells us what's expected from State Bank of India when it comes out with the results today. July saw the auto industry run for cover, with heavyweights like Maruti reporting more than 30% drop in monthly sales, and the commercial vehicle players didn't have it any easy either. Sales were down across the board, specifically for the medium and heavy commercial vehicles. Yatin Mota is here to take us through what went wrong last month. Yatin, there's a dichotomy when the wholesale numbers and the retail sales, where registrations actually rose last month.
So Neeraj, this is a clear case of destocking which is happening on the ground. We'll cover that in greater detail. But if you look at the chart on your screen, of course, we are talking about the fall. The things were, looking wobbly since the festive season, but the, fall accelerated post the March, month, wherein the sales on the retail ground also fell. More importantly, you're talking about the, month-on-month change that, we are talking about. The registration in the commercial vehicle side, the industry as such was close to 70,000 odd units, which rose to 71,250 units. So almost 1,000 units more on a month-on-month basis. However, when we talk to companies like Ashok Leyland, they clearly are of the view that now the dealer pockets are burning. We have the inventory situation in the marketplace. The sales are not as expected, versus what the projection was, and probably that is the reason why we are talking about a sales mix change which is happening on the ground, and more importantly, there is a destocking in the marketplace. Now, if you look at the dealer, stressed financial as well as discounting to the competition, that has led to the overall, commercial vehicle players taking this particular plunge. If you look at the overall destocking inventory also, Q2, Ashok Leyland in its conference call said that in the second quarter there will be a destocking which will happen in the marketplace, simply to do with the fact that the first quarter earnings were not as expected. There is inventory built up in the system. Now also when you talk about the slowdown in the light commercial vehicle, the slowdown is much lower than the medium and heavy commercial vehicle. and that is the reason why in the first quarter only we are witnessing some change in the overall sales mix. Light commercial vehicles are now contributing to the overall revenue pie, 33% for Ashok Leyland from almost 25-26% on a quarter-on-quarter basis. Now, if you look at the change, the light commercial vehicle segment this month of July, we are talking about breaking up the medium and heavy commercial vehicle sales to the light commercial vehicle sales. These are the light commercial vehicle sales. For Tata Motors, that fell by almost 21%. Ashok Leyland as well as Mahindra & Mahindra are the leaders here. They sell a lot of these light commercial vehicles. For them also, there was almost a 40% drop for Ashok Leyland and 16% down for Mahindra & Mahindra. Eicher, the category is slightly heavy tonnage. They do not produce sub 3.5 ton light commercial vehicles, but still they classify certain products as light commercial vehicles. And if we take that also segment is down 24%. The outlier being Maruti Suzuki on a smaller base. Their overall super carry sales were close to 1700 odd units, almost flat on a year-on-year basis. Talking about the larger dent, that has clearly happened in the medium and heavy commercial vehicle sales. These are probably the barometer for growth. These are the barometer of the things happening on the ground for a growing country. Here clearly the things are not looking that great. Look at the data points here. Everything is down 40-50%, clearly indicating the fact that not only the sales on the ground are lower, but now the companies are forced to roll back their wholesale numbers in order to destock the dealer inventories, which are quite high in the marketplace. Tata Motors, the MNHCV sales were down 46%. Eicher Motors, again the heavy duty truck segment, the sales were down 47%. Ashok Leyland trucks and buses sales down 40% in the heavy commercial, heavy duty space. Mahindra & Mahindra, small portion of business, but still a decent amount of base, 52% lower for that particular segment. Now, this is what the categorization looks like for Eicher Motors. The tonnage is 3.5 to 15 tons. Eicher Motors, the heavy duty segment is beyond 15 tons, and for Mahindra & Mahindra, the tonnage that we have considered is 3.5 tons. But clearly, the situation on the ground is not that great. The light commercial vehicles may take center stage, and now the companies are looking at production cuts, factory shutdowns, not only to correct the dealer inventories, but also they're trying to correct the factory inventories.
Well, clearly not a good month, and the signs don't seem to be that great either. Yatin, thanks so much for putting that into perspective. Conversations with all of these makers, CV makers and otherwise, would be very, very important to monitor as well as to what do they have to say about the months coming up ahead and whether the festive season can throw up some good news or no. Well, speaking of good news, maybe some good news. Bharti Airtel, while it reported its biggest loss since listing in the June quarter, but the headline numbers mask the underlying recovery made by the telecom operator since it shifted focus to fewer, better paying users. Somit Sarkar is standing by with a closer look at the financials. Morning, Somit. How did the numbers look like?
Well, on a consolidated basis, I actually talk about the India mobile operations. They were very good, but I'll start off with the consolidated numbers first. So if you see the revenues of the company on a consolidated basis compared to last quarter, they were marginally higher by nearly 0.7% to close to 20,700 crore rupees. The EBITDA of the company, now that jumped nearly 25% to close to 8,300 crore rupees. Margins came in higher at 40%, but this was because of Ind AS adoption. Now revenues were higher by nearly 26.5 crore rupees and EBITDA was higher by nearly 1,500 crore rupees due to adoption of the new accounting standard that is Ind AS 116. Now on the bottom line front, the company reported its biggest ever loss of close to 2,900 crore rupees, and that was because of higher cost and an exceptional loss of close to 1,500 crore rupees in the first quarter due to network reforming and various other provisions made by the company. On the ARPU front, that is the average revenue per user, now that came in at around 129 rupees, which was higher than what analysts were expecting. And also, if you see this ARPU number of 129 rupees, this was lower by 2 rupees, and that was because of reclassification of one segment which was earlier a part of the India mobile operations, but now they have moved it out from the India mobile operations. So that's the reason the ARPU was low by nearly 2 rupees. So the actual ARPU of the company included that operations would have been close to 131 rupees, which was way ahead than what analysts were estimating at around close to 126, 127 rupees. Now if you see The India mobile operations, that reported a good set of numbers. Now this is even after adjusting for Ind AS 116. Now this was due to lower customer churn, increasing data subscribers and higher average revenue per user that the company generated in the first quarter. Now the India mobile subscriber base stood marginally lower at 28.1 crore as against 28.3 crore in the last quarter, while the 4G subscriber base increased to 9.5 crore from 8.7 crore. Churn ratio, that is the attrition rate, that also lowered for the company at around 2.6% versus 2.8%, which led to this good quarter for the India mobile operation. Now, if you see financially, the India mobile revenues were higher by nearly 2.2% to close to 10,900 crore rupees. EBITDA saw a bump of nearly 51%, again because of the Ind AS adjustments. So if you remove that Ind AS 116 impact, EBITDA was marginally lower by nearly 2% to close to 2,500 crore rupees. But that was because in the last quarter, there's a fourth quarter of financial year 2019, there were some one-off cost reversals because of which the EBITDA was higher in that quarter. So adjusted for that, the EBITDA has come in line for Bharti Airtel for the India mobile operations. Now the India mobile ARPU stood at close to 131 rupees, that is adjusting for that reclassification, which was the highest in the last 7 quarters for Bharti Airtel. And the other important details for Bharti Airtel earnings were the capital expenditure for this quarter stood at close to 5,000 crore rupees, which was lower compared to what the company has been doing. And this is according to what the company had earlier said, that that most of the capital expenditure has already been done, and the capital expenditure for the following quarters will taper down for the company. Also, the company's net debt, excluding the lease obligations, of that reduced by nearly 22% to close to 88,500 crore rupees, and that was because of the various fundraising initiatives taken up by the company in the first quarter of financial year 2020. So in all, the India mobile operations were pretty much in line, and in fact on some fronts it was ahead of what analysts were expecting, and Airtel Africa numbers were already reported, which are also in line with what analysts were expecting. So all in all, a good quarter for the company.
Just a quick follow-up, Sumit. There is a clear dichotomy between what Airtel is doing and what Vodafone is able to do, right?
Yes, I am writing a copy on that, and you'll actually need to know what is the difference that Vodafone and Jio and Airtel has been doing, and how the divergence between Vodafone India's performance and Airtel India mobile operations performance has now been increasing and has widened in this quarter.
Okay, so a story around that will be there on the website a bit later on in the day, I reckon, or over the weekend for sure. So you can log on to bloombergquint.com and try and read more about this. But Saman, thanks so much for putting that into perspective. As I said, the stock was under pressure yesterday. Could well be under pressure today because the markets may not play ball, but the numbers, the headline numbers and the loss masks an underlying recovery. Maybe, just maybe, the street might take cognizance of that. So that's Airtel, the numbers that came out. What about numbers that will come out? The 3 or 4 large names that will come out, remember ITC, HDFC, etc. But we want to talk about SBI because that may deliver a healthy profit in the first quarter as it leaves the worst of its asset quality pressures behind. Shefali Malik is standing by to tell us what the street is pricing in from the state-owned lender. Very important number. We always track it very closely. Shefali, what's anticipated? What about the numbers?
The net interest income is expected to see a decent growth of about 7%, but profit is expected to be around 4,105 crore rupees this time around versus a loss of about 4,876 in the same quarter last year. So huge swing. And operationally, the numbers are expected to be decent. It's expected to be a growth of 24% when it comes to pre-provisioning operating profit. So operationally, at least, the numbers are expected to be good, but profit is always a question mark. The bottom line is always a question mark for State Bank of India, because you never know what they're going to do with the slippages, if they are going to do some contingency provisioning, or are they going to provide for some of the assets which have been in focus lately, specifically DHFL. That is something that we are closely watching out for. That could be the swing factor, as you always ask me. And so the loan growth is expected to be around 15 to 17%, so a decent number there, which will primarily be led by the retail book and the portfolio buyouts. So that's going to be the factor which is going to boost their overall lending. Deposit growth expected to be around 7%, and a couple of brokerages in last couple of months have been talking about various positive factors that could work out for State Bank of India going forward. And one of the factors is that for State Bank of India, strong margin levers could play out for them, which can unfold from the first quarter itself. So that is also something that we'll be looking forward to. And also remember the savings account cut that had happened, or rather the benchmarking, because of which the savings account rate came down. So that will aid their margins in this particular quarter, and along with that, lower operating expenses. So these two factors put together is going to aid their overall operating income. So that is the reason why we are expecting a strong growth on pre-provisioning operating profit. And as we've seen even for some other lenders, the agri portfolio, because of the seasonal factors, that takes a hit during the first quarter in terms of the asset quality. So we're expecting that as well this time around. And how, Yatin was talking about how there's no respite coming in for the auto sector. What these public sector banks are witnessing when it comes to their, auto portfolio in terms of fresh lending or the asset quality, that should be interesting to see. And slippages number, so we are factoring in around 7,000 to 11,000 odd crore rupees. And from the written off account, we are expecting some better recovery, so that should aid their asset quality. So that's what broadly we are looking forward to. But if you look at the trajectory of just the bottom line of State Bank of India, it has been like so erratic.
Yeah,
like
but which is why I think people are not looking at it that closely anymore.
Yeah. So we look forward to the slippages figure, the provisioning figure, what they do with some of the accounts. So,
okay, now just a very quick follow-up. The reason I asked is because you were on the button when it came to the slippages market Axis, right? That disappointed the street.
Yes.
We saw what happened to the stock. At one number that you would watch out for, slippages or something else?
No, slippages is one thing, and from which book it comes from, whether it is some fresh accounts or is it something from their SMA book, etc. And street is closely watching out for the provisioning that they do for DHFL, that if that goes higher, then that could impact the bottom line.
Okay, so I hope we've given you a synopsis of what you should watch out for when the results break in. Shefali will be here analyzing those for us. And of course, you can read all about it later on the website as well, bloombergquint.com, as I always say. Shefali, thanks so much for putting all of that into perspective. That's all that we have on First Word today. But lots more lined up on Indian Open. We decode the June quarter earnings for Ashok Leyland with CFO Gopal Mahadevan and talk about the auto sales slowdown with Autocar's Hormuz Saurabh and discuss the business outlook for Nesco with Chairman Sumant Patel. But after this break, we get back to the top story, the trade war and the resultant impact on world markets and commodities like crude oil. That's coming up. Stay tuned.